Good morning. What's up, guys? Hope you're having a good one so far. But it's time to get to work here. We have a bit of a descending range. I'm going to put my head down. I'm going to scalp this thing. We're going to see what we can get here. Range so far on the day is not, tremendous. If we look at the more recent range here, like, of course, the open goes back a bit, right? This 2-minute chart that we're looking at now. But I want to look at the more recent range here. We're kind of looking at the low of day. Call it maybe 120. We're looking at less than 80 points in this more recent range. So we're going to see what we can put together here. Now, when we look at these bars here, we're 38 seconds out from the close of this 2-minute bar. When I'm looking at this, I know a lot of you guys are like, that's a sell setup. Yeah, I mean, I wouldn't yell at you for doing so. But for me, we're in a range, right? So if anything here, if we get a nice clean close at the low of this bar, I know there's a stop hunting mentality down here, but I gotta tell you, I am more willing to buy that than I am to sell it just because of the range mentality. I know that sounds kind of crazy, but that's where I currently sit. So let's see how we close here. And again, that stop hunting mentality is certainly there. there we are. Gotta fill. I will risk the curl here. And we are in. And I'll pull that for a quick little scalp. All right, how are you guys doing? Good morning. That was, I didn't put the open P&L up for you, but that was a quick 900 bucks or so. Let's see if we can keep rocking and rolling. Tony, good morning. Vinny, Roy, Brandon, how we doing? Panther, Peter, Trading Chris. What's up, guys? Good morning. Just like that, dollar bill. Sometimes it works that way. Marshall, good morning. Giovanni Joe, good morning. How we doing, brother? Leon, how we doing? All right, keeping an eye here kind of on the same channel. Gotta be quicker. If you guys don't have hotkeys set up, get it set up. If you're gonna scalp, you gotta use hotkeys. 100%. You can't be fumbling around with a mouse and keyboard trying to put every order out individually. Set up your hotkeys. Takes 3 minutes. Cryptors, Javaz, how we doing, guys? Good to see ya. Skeeto, did you hit 5K yesterday after stream? No. I got back to like 35 or 3,600 after stream. I was at 3,500 on stream, and then I lost, I think, 2 in a row, put us back to 1,500 or something like that at the end of stream. And then I got back to, I think it was 3,600. So no, I did not hit my daily goal yesterday, but we were green a few thousand bucks. Leon, past 225Ks today. Good work. All right. So again, I have my eye on this channel here. Probably draw it like that. That's probably the average of what most people would draw. Now again, keep an eye though also on this. I mean, here you have low of day. Right, stop hunting mentality there. But this channel exists, so it takes precedence over the stop hunting mentality. Again, in a lot of cases, I would sell this rollover. But being that we're inside of a channel, couldn't do it. I would like to sell that rollover, take out some stops at the low of day. But this is such a range-bound market right now, I do exactly the opposite. Context is everything. Leads me to make complete opposite decisions with the very similar bar, signal bar. Of course, it doesn't always work. But you only need a little bit of edge. A little bit of edge pays a lot of bills. Hey, Mario, good to see ya. What's up, UK Futures? Bruce, how we doing, guys? All right, here's the roll. Ooh, that was kind of a bizarre end of that 2-minute bar. Closed in a doji, nothing I can do there. Right middle of the channel. On to the next bar here, 2 minutes out. About a 15-second workday. You could if you wanted. If you wanted to, you could, but just understand that, you know, if you show up, you sit down, you take a scalp, and you leave, scalping relies on a bigger sample size, okay? So in that case, you're really only going to take maybe 250 trades a year. If you take 2 a day, you're looking at maybe 500 trades a year. It's a little bit better. But with scalping, the bigger the sample size, the better. Okay, the smoother the equity curve, and, you know, usually the more money you can end up making more consistently, I'll say. But, you know, there's nothing to say that you couldn't do that. The numbers will work out over the years. But I prefer to get that sample size up every month to even out that curve. Oh, you guys see this? We're getting a, you know, doji, inside bar here, doji, inside bar. What do I mean by inside? It closed inside of the previous bar's wick high. Right? This was not an inside bar, obviously. Bought that rollover for a quick scalp. Now, this bar becomes very interesting to me. We'll see. I mean, if you wanted to draw this more conservatively, just for visual purposes, you know, you could draw it like that. You have to understand that this is more of an eyeball. Every trend line is more of an eyeball scenario. It's never going to be to the exact level because everyone's going to draw it a little bit differently. Every algo who's looking for it, because they're self-fulfilling prophecies, right, is going to maybe draw it slightly differently based on however many touch points it detects, how it was programmed. So if this were to shoot up here, you know, to 23,170, can't call that a break necessarily because someone else might have it drawn like that, and that's still within reason, right? Just draw the average, don't overthink it. All right, let's see what we get here now. 50 seconds out. Now again, if you extend this out, every reasonable bull, and I suppose bear who's looking to cover their shorts, this gets wider because this is a relatively aggressive descending level, right? So you have more and more room. Yeah, it's going to take advantage of that quickly. I was kind of hoping for a close in this region here so I could short, look for a push out, take out these lows, take profit as we come into this little corner here. But that's going to be a little fast. A little quick for my taste. Took advantage of it right away. Okay, now we do have the low here. Again, this level here, this horizontal line, that is the low of day. So let's see here. This bar here is very telling, 2 minutes out. Let's see if we snap up that low of day, which would also break the descending level, or if the bulls are able to crank it back up inside of the range one more time. Kalanow, good morning. Jason, hey Nico, bad day for me. What do you think about today? That's fine. Every day's fine. Every day's all right. Some days, again, like a nice clean trend day where, you know, every bar closes near the high. Bull trend day, for example. That's great. Days like this, a lot of people would call just chop. It's not really chop. The volatility's all right. I mean, the ATR here on the 2-minute chart is 22. I can't complain about that. We've seen 5, you know, as far as an average range. But range days are harder to trade because most people learn how to trade breakouts. Because that's what everyone teaches. But then they learn as they go that, you know, 80% of days are going to be range days, and far more than that lately. So what do you do on, you know, 80 to 90% of days? Well, you have to trade ranges. And if you're betting on breakouts, I think this is probably a big reason, honestly, why... Did I just solve trading? I think this is a big reason why a lot of people fail. Is because they all learn how to trade breakouts, but 80 to 90% of markets are range markets. So they're betting on every breakout when 80 to 90% of these breakouts are just going to fail or not go far enough for them to hit take profit. And then it comes back into the range, stops them out. And everyone wonders what the hell's going on. Context is everything. Markets have inertia. They're resistant to change. Try to understand what the market's doing, because it's probably going to continue doing some version or variation of what it has been doing until something big changes. I mean, you look at the daily chart, bottom of your screen. Should you really be betting on big breakouts here? Probably not. Tons of overlap. Big mix of, you know, bull and bear bars, small little bodies. There are some wicks. I know the candles are small to the far right, but there are wicks. That means breakout attempts that failed in reverse, right? So CPI this morning, the regular CPI year over year, forecast was 2.6, came in at 2.7. Month over month, forecast was 0.3, came in at 0.3. Now the core CPI year over year, forecast 2.9, came in at 2.9. Core CPI month over month, forecast was 0.3, came in at 0.2. So nothing shocking. All right, we are 30 seconds out here from the close of this 2-minute. Now, if this remains indecisive right around this region, there's nothing I can do. If we get a big hard dump off and we close like way down here, then all of a sudden I have to think about selling for a continued move lower. And if it somehow miraculously in the next 10 seconds turned into a bull bar that closed up here, I'd have to buy that rollover for a scalp. But an indecisive close is a no-go for me. And that's what we're going to get, a relatively indecisive close. Very close to the previous bar's wick low, on to the next bar, 2 minutes out. There we go. Yeah, Roy, so, I mean, I'd say CPI was relatively neutral, to be honest with you. That's news, man. News is too efficient. This is another big mistake I think a lot of people come in and make. You know, you look at news and it's good, and it would make sense that the market would go up 5% on that news, but that's not how this operates. There's a lot of really, really, really smart people and institutions behind every news release, pricing in every news release, and it's very efficient. By the time news actually hits, it's 50-50. Okay, so especially when you get a neutral release like this, if you look at a 5-minute chart, you can see 7:30 here central is when that hit, CPI. You know, you get kind of that rosy feel, it moves higher, and then when you get that dump off, that can create, after a little bit of a rise, that can create a very negative feel. Okay, so if this market, I'm not saying it's going to, but if this market were to just fade all day, I guess it wouldn't surprise me. However, we have to also understand that it's a range market, okay? So I wouldn't imagine that it would just turn into some big bear trend out of nowhere, because everyone knows it's a range market. I mean, you look at the daily chart, clearly bottom of your screen, clearly big range market. We're not trending. Everything's failing. Every breakout up or down is failing. So back on the 5 minute, you know, I kind of a negative feel descending channel, I think is not unlikely here. But we'll see, man. I don't care. Just, I don't have a bias. Just give me the price action and we'll trade it. I know though that is a very, maybe more so 30 years ago, but that was a very common like manipulation tactic that institutions would use, by the way. I think it's important to know that. I think Kramer actually admitted to this one time, but it was widely known to be used. And back then it didn't take as much buying power to make it happen. You could take a market up early in the morning, the futures. Early. And while everyone's waking up, it's like, wow, that feels, you know, okay, market's nice little, small little green day, that feels good. And then you intentionally fade it really hard and fast. And that can feel very, very negative and create a very big bearish bias. Like the little pop and then the very fast rollover. And a lot of times you can get enough money behind that following that move where it fades and puts you deep in the money. You started it, but you make way more than what it took to do it because all the money gets behind that move. Maybe not as much today, but I think we still see it, maybe with some bigger institutions. Wouldn't surprise me if we see that going on. But that was rampant a few decades ago. There we go. Nice clean little bull bar. Let's see if we can close this way. Minute 45 out. Yeah, you know, Vinny, the thing about that is, though, is I don't really think there's anything illegal about doing that. You're just making buys and sells. And if you have enough money to create a feel in the market, I mean, show me the law. I know you don't like it. I know people don't love that, but you know, I mean, they're playing the game. They're not really doing anything wrong if they're just trying to create a feel in the market. We all know what they're doing, of course. It's not great. But as active traders, you can choose how to look at that, right? You can say, oh, that big money screwing the little guy. Well, I think they're kind of more so screwing each other. In a way, they're creating volatility for us, which is what we need. You guys have seen, I've sat here on stream when ATR was 4. And it's not great. So if these little tactics create more uncertainty, more volatility, that's actually a good thing for us. And I think you should look at it that way. Okay, let's see what we get here as far as close. Let's clean this chart up a little bit. I want to see a close kind of above, I guess, 120. And we're not going to get it. There's the rollover on to the next bar. A little too big of a wick there. Pull back. All right, minute 25 out here. Again, if we get a nice, reasonably strong close here out of the bulls, ideally above 120, maybe plus a few points at a minimum. Then I have a little scalp on my hands. All right, copy trader engaged. 18 seconds out. Hands off, no trade. Next bar. Chris, good morning. How we doing? Oris, what's up, brother? How we doing? All right, we got a minute 15 out. I mean, right now I need to see, you know, does this kind of thing maintain? Or does this turn more into, you know, meaning it with this up top? Or does this turn more into, like, a very unsustainable, aggressive channel like that? $45 seconds out, let's see. $20 EMA on the 5-minute, by the way, is up at 152.50. So that's pretty out of the way. That's up here on the 5-minute. Again, this is a 2-minute chart if you're just joining us. Not there, inside close. No trade on that bar. On to the next, minute 57 out. Cryptors, yes, pre-market. Pre-market. That's when the news headlines hit, specifically for smalls. Which wick am I most concerned with? The most recent high wick 4 minutes ago, or the one just after the larger red bar? I'm looking at this wick here. Yeah, you're looking at, hey, you know, this one or this one. You could look at both. Again, it's not wrong. For me, though, on the curl, I'm more looking at this. Just fits my balance more of reward to risk and confirmation, I think. Again, a lot of this is discretionary. You can make a different decision than me. It doesn't make you wrong. Inside close, not there. Yeah, Rick, I am, if it's set up that way. Now, if we got a big bear bar closing like here, right, if this bar right now turned into a big bear bar and it closed here, I would sell the rollover, look, take out some stops. Because it still fits the channel, the descending channel mentality. But right now, yes. Jason, good to have you, brother. Good to have you. Vinny, Nico, how are you limiting it with hotkeys? I don't know if I understand the question. I'm just using limit orders that are set to hotkeys. So the way that I do it is, you know, like a typing class where you have your thumbs on the space bar, F, J, and then, you know, your pinkies are on A and semicolon. That's what I do, but I move my thumbs out to the Alt keys because I have an Alt key on either side of my space bar. If you don't, sorry, but if you do, this is what's comfortable for me. And then I use Alt as the trigger key, and then I have basically 8 hotkeys without having to move my fingers. And I can move my fingers and create even more. All right, 20 seconds out. I don't like this big wick. I want to see the bulls take this up and close down that wick, make a bigger body. Too big of a wick. Next bar. Oh no, Vinny, my hotkeys for limit orders. When I buy, the limit order is targeting the bid. When I sell, my limit order is targeting the offer. Okay, now in strong, that's good for range trading because you oftentimes get a tick or two, you know, before it goes your way. So you get a fill and a slightly better price. For continuation trades, you'll oftentimes see me do this. Okay, I'm gonna put out a stop limit buy, right? There it is, and then I move it. All right, stop limit sell, we'll put that out, and I move it. Those are good for if you don't think you're gonna get a tick or two in your direction, and like, let's say I wanted to buy, I wouldn't. But let's say I wanted to put a stop limit buy 1 tick above the wick high of this. If we break that, then it buys. Okay, you can't really use a limit order to create that same effect. Different orders for different situations, right? But no, I'm targeting the bid and the offer. I'm not actually setting price myself. All right, 30 seconds out here. All right, again, 20 EMA on the 5 minutes at 23,150. So that's about there. We got to keep an eye on that. Again, there's the look. There's the 5 minute. We know that's a self-fulfilling prophecy. You know, it's not the end of the world for me if we get a decent setup here, but I am just keeping an eye on that. Limit order out, see if we get a fill, and I will set my initial risk down here. Doesn't mean it has to go that far to stop me, but we'll see how the price action. Now I'm driving manually, fingers on the hotkeys with price action. All right. And there's the position window. Bull's trying to bring it up here for a test of that, I would say the 20 on the 5. See if we can get up toward 50. Yeah, Bull's struggling a tad here. Struggling a little bit. All right, we got a minute 28 seconds left here on this 2-minute bar. Let's see if this rejection bar stays the same. Again, if for those of you guys that are new, if we see a close where it's like, oh man, if I were flat, I would do the opposite. I would enter short because I'm sitting long. If I was flat, I'd enter short on the close of that bar. Then I manage early. Right, I mean, I try to think of every decision as if I were just flat, even if it's a closing order. All right, 36 seconds out here. Yeah, sizable wick. Fingers on the hotkeys, ready? There's some volatility. We just get a headline. Nothing coming through immediately. All right, minute 22 left here on this 2-minute. No headline coming through yet. Bulls are having a bit of a hard time around here. 20 EMA on the 5-minute, by the way, is now at 148.20. Yeah, I mean, so far at best, we've been about 7 points in the money. It's not enough for this little scalp here. And bulls struggling, aren't they? 40 seconds left here on this 2-minute bar. Come on, bulls, grow a backbone here. Let's go. We can't even take it through 150. Yeah, getting kind of hung up right around that 20 again on the 5-minute. I just don't buy that enough yet. All right, bulls, come on now. Take us up through 23,150. Man, no fill. We're struggling around 50. Yeah, I figure we get a fill. All right, we are out there. That was about, I don't know, what was that, a $1,400 winner? Maybe $1,500 winner? All right, let's move on. That leaves us up $23.80 on the day. So we're up 2,300 bucks. Let's keep seeing what we can get here. Yeah, hey, Roaring, you know what? Just, if you can, man, just buy a cheap little eval. It's like 30 bucks, I think, right now. Maybe even a little bit less. I think it's like 30 bucks. And then trade one micro. You can dip your toe in for 30 bucks. if you don't want to trade paper, which I think having a little bit of money behind it is better, just to represent kind of a similar mentality. Yeah, Jacob, I'll do partials if I scaled in. I did not scale into that trade, so it's just 1 in, 1 out. But if I'm 2 or 3 in, I'll be 2 or 3 out. Yeah, good call, Joe. 5 minute is looking reasonable here. I'm looking at this little wick high, kind of 65 here. So let's quick switch to a 5 minute chart. Yeah, not there. Back to a 2 minute. It's 2 trades so far here today. Yeah, I'm gonna get rid of this line here. Just clean everything up. Okay, we are 90 seconds out here. You guys see this little doji close, inside close, nothing to do here. Nothing on this last bar at all. So on to this bar it is, a minute 20 out to see if we can grab our third scalp of the day. $45 seconds here. If we can get a nice clean bull close, I would argue that that little descending level from earlier has been completely broken. There's really no way to draw it anymore at that point. But I would need to see this close above these couple of wicks. So kind of like above 64.50-ish. 20 seconds out. Again, this is a 2 minute chart. If you're just joining us, I love the 2 minute chart. Also, I trade the 5 minute. All right, here we go. 10 seconds, see if we get a clean close. Damn, I thought we were gonna get it for a second. You guys see that wick back? We got the pop through, quick wick back, no trade, hands off, next bar. Minute 53 out. All right, 52 seconds. See what we get as far as a close here out of the bulls. Looking clean here thus far. Let's see if it can hold that, maintain that. Seconds out. Copy trader engaged and ready to rock. Let's see if we get it. Come on, bulls, hold it up. Oh, son of a bitch. You see that? The bulls are questioning that I can't take that trade. Next bar. This is the discipline, man. If you're like, yeah, fuck it, I'll just put it on. Come on. Your competition didn't put it on because the setup said no as far as your plan. So, of course, I'm not talking about that trade specifically, just theoretically, your competition is more disciplined, so you have to be more disciplined. Follow the plan. Doesn't mean it's always going to work, by the way. Most of you guys get it, but we've had a few crybabies who are like, man, I won 20 in a row and I just lost 2 in a row. What's going on? I don't know if I'm cut out for this trading thing. It's like, you're thinking that way. The answer is probably you're not cut out for this trading thing because that's crazy. Execute your edge. As big of a sample size as you can. And if you have an edge, you'll make money long term. Just do your job. 50 seconds out. Let's see what we get. All right, pretty indecisive bar here thus far. We have 15 seconds till the rollover. See if something crazy happens in the last 10. I'll buy that rollover. Buy that rollover, and we will risk this little curl as our initial risk. That's our protective stop. If it curls beneath there, I just want to be out and be done. But I'm going to take a bet on this little channel maintaining. Range market, range market, range market, right? I'm just betting against breakouts. Driving manually here. Minute 15 left on this 2-minute bar. Big bear activity here. Let's see if they can take it below that big bull bar wick. If they can, I want to be out. 45 seconds left here on this bar. Protective stop in place. That's going to stop us out, I believe. Yeah, super high probability. Bull's trying to hold that little wick low. I don't know if I'd buy him. Still in the trade. Bull's trying to hold that little wick low of the bull bar that I put the stop beneath. At this point in the trade, probability is certainly not in our favor, but it's all right, man. That's the idea. Put the idea on, you let the idea work. And if you get stopped, you move on. Now, guys, with the so what you're seeing on this, on the execution screen, I mean, you can clearly see when this is green. Of course, I'm long 67 micros, but this is the leader account. I sacrifice it to keep it 1 micro so that I can ratio the rest of them in the copy trader easily without thinking too much about it. That's green, so that means I'm long. And right now, that's red, which means I'm in the red, right? Thought that was pretty clear. Well, bulls are trying to take this higher. See if they can. Well, back to very slight green on the trade here. Again, this whole bet was on the breakout failing, so let's see if it can actually fail or if this is just a little short-lived bounce. And by the way, the breakout failing means this breakout. Failing and reversing up back into this little bull channel that we're seeing. Now, this could also very well turn into a sideways channel, in which case this move higher won't go very far, if that ends up being what happens. Just be neutral about your trades, man. You got to look at it from every angle, and then just make your decision. Everybody, I get it. It's emotional. It's money. You want to be right. I don't like being wrong either. But in trading, there's just no room for that. Just internalize how difficult trading truly is, and it's easy then to admit to yourself when you're actually wrong. And either let your stop do its job, don't move it, or cut it when it's time to cut it. But a lot of people, I mean, I get it, it's money. And it's easy to say, but I'm sitting here doing it, so I've been there, I've been through that. Just admit when you're wrong. Accept being wrong. It's okay. That's part of the game. You're not going to win 100% of trades. Ridiculous thought that you even would. And a lot of people, by the way, also like to ignore other cases. Like here, I'm sitting here telling you, you know, this very easily could turn into a sideways trading range, in which case we're probably not going to go very far on the break higher. Okay, but I'm trading price action, so it updates every tick. And obviously that goes against my thesis here, but that's all right. As the trade kind of matures, we got to mature with it. All right, now we'll see if this turns into, you know, kind of a new descending channel. I would imagine, if anything, if the ascending bull channel doesn't hold up here, meaning we kind of struggle if we get up here to begin with, we kind of struggle to break through this wick high, then all of a sudden we're looking at likely a sideways trading range, which I need to take into consideration when looking to manage this trade here, rather than asking it, you know, to go straight to 23.2, which was obviously never the idea anyway, but just for clarification there. Come on, Bulls, have a little backbone here. At least test that little high. Come on now. Yeah, there we go. I'll take it off. All right, well, that turned out to be a decent little scalp, huh? I'll take it off as we test this high. Because, I mean, if we look here, it wouldn't surprise me at all if we see this kind of thing start to happen. sideways little trading range after a tight push. We've been seeing this a lot. So when I initially put that trade on, you know, I was more looking at this bull channel and betting against this little breakout attempt, that bear bar closing near the low succeeding, right? Well, I mean, in a lot of ways, you could say I was more even looking at like a tighter version of that. And then this happened in hindsight. But we avoided the stop out. I'll clean this up and just leave this. I think we're probably going to see a sideways trading range. So I'm a little hesitant to get long up in the top half of this. But let's see what happens here. Let's watch this bar. We got a minute out until this bar rolls over. Kirux, what was the one big thing? What was one big thing that helped you stick to your rules? I recently had a bad mental day, broke all my rules, blew 5 PAs, need some learning lessons here. Well, a couple of things. First of all, Kirux, the number one thing is understanding what your data actually kind of looks like. Like if you trade for, and let's say, listen, even if you don't track your data, but you trade and you follow a very strict process that includes some discretionary decision making as part of the process for a few months, and you take payouts or you make money in a personal account or whatever, you had edge. You covered your commissions and you made a profit. That's called edge if the sample size was, you know, bigger than like 30 at a very minimum, 30 trades at a bare minimum. That's edge. And now, especially if you track your data, your trading data, like you write down your trades, you put it in a software. Like we have a software, I had TraderView build us a software that I offer to all my one-on-one people who enter all their trades. I watch it, I have 24/7 access, and I make sure everything's looking okay and where we can improve the little habits we need to knock off to turn the corner. That's what I believe in, because that's the only thing that's real. That's it. Now, aside, and by the way, once you have that, because listen, I had the emotional issues just like everybody else. I know a lot of you guys are like, what the hell, this, you just take the trade, you don't give a shit. I don't, because I've been doing it a long time, and I know at this point that if I follow my process, it works. Whether this trade is a winner or a loser, I just don't give a shit. Okay, I care about the end result, but I know that the end result is coming. It's just carry out the process in the meantime. So, you know, Kirux, that plus the fact that you should understand that your competition is following their plan. And the 95% who aren't making money are doing what you're doing. So which camp do you want to associate with? Depends on your personality type, which of those is going to work better for you, whether you're chasing good data or running from being a part of that unprofitable camp. For me, a mix of both, I think, worked the best. If you want to be like everyone else and lose money, do what everyone else does. Make rash decisions. Gamble. Yes, Vince, I am live. Vincent, I am live every day. Yeah, Joe, I upped it a little bit. You'll see the contracts. The size will vary. Depends how many accounts I'm trading. Depends on a lot of factors. Volatility of the market. Volatility's been relatively low, and in range markets, I tend to trade a little bit bigger size. Now, in a really hard trend, I might add 3 times, and the size might get really big. As far as horizontal scaling. But yeah, I'm a little bigger than I was yesterday today. I'm all good on my end, by the way, for the stream. If anyone is having issues with buffering, just refresh it and you should be good to go. Okay, we're 1 minute and 18 seconds out. Now again, this is a weird one, because remember, I'm thinking, hey, maybe we see a sideways trading range here. I kind of want more proof that we're going to actually see what the bulls think we're going to see here. Yeah, I think the buffering's a YouTube thing. I saw a couple other people were maybe having some issues this morning. All right, 20 seconds out. We're up about $3,700, $3,795. Big wick, big pullback wick. Again, I just don't know if I buy this quite yet. I need more proof that the bulls are actually going to do what they think they're going to do and hold this ascending channel. I'm more inclined to think that maybe we see a variation of a sideways trading range right now. This was the stronger, I guess the strongest bear pullback that we've seen pretty much since I went live. Trip, what's up, brother? How we doing? Okay, so we're three scalps in so far here today. And we are 3 for 3, so let's keep rocking and rolling. Again, I gotta kind of chill out here because I think we're probably gonna see a trading range. I just don't buy this bull attempt to move higher when the bears are able to do this. But if they do, we'll get long. Just not ready to do that yet. Derek, how we doing? Yeah, see that bear's pulling it back. Gotta be careful, man, betting on breakouts in a market like this. It's a range market. Gotta be careful. If you're not studying or trying to figure out a process for looking at charts, which at the end of the day is just proper guidance and screen time, to try to understand kind of the context of what's really happening, it's not going to work, guys. I'm telling you that right now, if you're not doing that. And it's so easy. It's so easy to accept that, all right. I need to know setups. I need to have setups that work for me. I mean, you guys see my setups are relatively simple. But I need to apply them in the proper market context. Don't ignore that second piece. It's not hard enough to not implement that. It's just like not very talked about for some reason. Markets are different and certain setups work. Like, why would you take a continuation setup in a range market? And therefore, why would you take a range setup in a trend market? Right? I mean, you wouldn't. At least most of the time. And again, a really easy way to think about that is, hey, if you don't have room in the range, which a lot of ranges you're not going to have room, then the trades are mostly going to be reversion trades. And you guys see there's little nuanced things in a range market, especially where I will take continuation, but I'm not using stop entries extremely often. Okay, look here. This has me very interested. Can't buy it. Can't buy it. Buying would be a bet on this. Right now, I really think we're probably going to see more of a sideways trading range. But focus on the setups and focus on context of the market and when to apply the setups where. You know, you might make an opposite decision. You guys saw first trade I took of the day was buying the close of this bar into this bar. Quick little scalp. Took what, 15 seconds, 10 seconds? If that. Now in a bear trend market, would I buy that? Hell no. I'd be selling that rollover. But we're not in a bear trend market. So context saved me from a loser, bagged a winner. Right now, again, it's not going to work 100% of the time, but it puts you in a better situation to make money more consistently. And it just takes the proper guidance and screen time. That's it. So don't ignore that. It's a really big deal. All right, but let's see here. If we backfill pretty much this whole sideways trading range. If we do, then I was right. And we might have a sideways range in our hands, on our hands. Vinny, Nico, do you recommend negative R in ranges? What he means is a negative reward to risk ratio, like risking 2 to make 1, for example. Yes, I lean heavily into negative reward to risk often in range markets. And people say, oh, that sucks. That's really stupid. You can't make money that way. It's like, oh, dear God. Probability is another factor in the equation here. Probability increases when you go negative reward to risk in the right context. Right, you can retain an edge even risking more than you make. It's no different than having a big reward to risk, meaning risking 1 to make 3. Guess what happens to probability when you make that ask of the market? You're making a big ask. It goes way down. Can you still have edge? Of course. But you're not going to have a 90% win rate risking 1 to make 3. The Nasdaq is too efficient to make that happen. Oh man, one more sub and we hit 101K. Let's do it. Appreciate you guys hanging out. All right, we got 30 seconds left here on this 2-minute bar. Ten seconds, let's see here. Now remember, we're kind of right in the middle of this sideways trading range. You guys know I'm not big on the middle unless there's a very clear setup. That's going to be an inside close anyway, right in the middle of the trading range. Nothing there. Next bar. All right, 101. Joe, I went from trend trading. I went from trend trading to loving scalping. It's your fault. Hey man, when there's no trend, the hell are you supposed to trade if you're a trend trader? You could say, there's a little bit of a bull trend here intraday. Yeah, I guess. Kinda. Hey man, I wanna get big and size into a trend as much as the next guy and have a $40,000 day. Fuck, let's do it. But if it's not there, we gotta scalp the ranges. Gotta pay the bills, gotta make money, gotta keep revenue generating. And if 80 to 90% of days are gonna be range days, can't just rely on the trend days. Flat right now. We are 3 scalps in on the day so far, and there's where we currently sit. Gonna keep pushing. Nico, how'd you get so good? I'm still learning. I'm good, but I'll get better 20 years from now. Nico, how did you get so good at scalping edges? Was it just getting pummeled? Yeah, it was a lot of years of a lot of pain that nobody saw, except for my now wife. And I don't think you need to go through all that, but you're gonna have to put in the screen time. But I mean, please, everything that I'm telling you, again, there's a million ways to do this. You don't have to learn from me. Learn from whoever the hell makes sense to you. But logic, using logic is really important in trading futures because they're very efficiently priced. Probability is going to be somewhere between 40 and 60%, 90% of the time, and then every once in a while, on big, quick moves, that probability can shift further out of the spectrum between 30 and 70%. Again, that's assuming a 1-to-1 reward to risk, just to keep the numbers simple. So you have to use a system and put in the screen time to be able to make better than average discretionary calls. Stick to your rules. Don't move stop losses. You know, don't take winners before your plan kind of says that you should be. And track your data, man, and I think you'll find the edge. And everything I'm telling you is just from a painful experience. Like, I don't care if you take the advice or not. I don't care. I mean, like, I want you guys to become traders, but, like, it doesn't affect me, I guess, if you give up on your dream. I don't want you to. Fuck, I think we need way more retail traders. It just helps spread money to small communities. But in the end, you know, there's a reason why I say the things I do. It's because everything that I say was a lesson that I learned the hard way. Because there wasn't nearly as much information. You know, there was information, some, not nearly as much as today. It's exploded recently. But even if there was this much information, I wasn't gonna, I mean, we're traders, right? We're already individuals. We're kind of on the outskirts of society in a way. We want more. And that personality type, we're not going to listen to people. At least I wasn't gonna. So, I get it. I get it. If you have to learn the hard way, I was right there with you. But understand that what I'm telling you, I had to learn the hard way. So, you can get the lesson without the scar, so to speak. All right, we're back filling that whole little sideways trading range. So turns out, looks like we were right. This is going to turn into a sideways little range here. Let's see how long this lasts. Ryan, thanks for the show. Do you believe in trading stock, small cap or mid cap, or is it just a waste of time? Will you advise someone new to start with stock or futures for trading? I think the best, if you're like brand new at trading, I would say the best thing you can do is probably spend $30 on one eval, trade one micro so you don't blow it right away and you can save yourself money so you're not having to buy a million of them. Buy one account for like 30 bucks. One prop account, maybe at like Apex, because it's the cheapest to just get started. At least with the eval. Of course, there's an activation fee when you pass take profit trader all in is actually a little bit cheaper in a lot of cases. But Apex, to just get trading is super cheap. Trade 1 micro and try to develop an edge. Now, as far as trading stocks, mid caps are a little bit tougher, I think. Small caps are... Here's the thing with small cap stock trading and futures. Okay, I'll explain my thought process here. Small cap stocks, small cap momentum stocks like pre-market, offer the most edge, I believe, potential edge in the entire market because they're extremely inefficiently priced. When news hits, nobody knows if it's worth $3 or $30. And it shows because that stock moves like hell. And everyone on stock twits, if you look up the ticker, it's kind of ridiculous, is like, this thing's going to 2,000 a share. You know, diamond hands, like it just started moving this morning and they're already married to the stock. And no one knows what it's worth. So it's volatile. And every trader on the planet has their eyes on that one thing, and humans make mistakes. And the market caps are so small that not that many, of course there are some, but not that many algorithms can actually take part in the move because they can't put enough money to work. So they can't really explain it to their clients, so they just let it go. And it ends up being a lot of humans, and humans make mistakes, and that opens up a big potential edge. But it's also dangerous because those stocks go from 3 to 30 right back to $1.50. So you have to be very fast. You have to be a good scalper, I think, to consistently make money at small cap momentum stocks. Mid caps are a little more efficiently priced, therefore they're tougher to trade. Futures are a beautifully designed trading product and a great place to learn without losing too much money, because small cap momentum, of course, to be above PDT, you have to have at least $25,000, probably more like 30 as a minimum, so you have a little bit of padding. And they move so fast that if you're brand new and you go in with a $30,000 account and you're like, I'm ready to trade, you might lose it all in one day. And that's not fun. So save yourself that headache, spend 30 bucks on an eval if you're brand new to trading, and trade the eval with 1 micro for a little while. Trade ES, NQ, more like MES or MNQ, the micro versions of those, right? And just try to see if you can develop some kind of edge over time. Do things that make sense. But, you know, honestly, as far as like a video, I saw someone else was asking about, you know, which one of my videos explains the scalping. To fit it all into one video, I could fit a lot into one video, but everything, I don't even know if that's possible. The best way to learn is to watch the stream, realistically. And just watch us do it every day. Oh, but I forgot one of the most important parts. I think if you want to trade two things, trading small cap momentum pre-market is a fantastic way because it offers a ton of edge, the most potential edge in existence in the market today. However, you can't get extraordinarily big. You can make a lot of money, don't get me wrong, but if you're looking to get like really big, like 8, probably more like 9 figures net worth someday, you're probably going to have to keep generating revenue pre-market in that world and then get to a deeper market, because that's a really shallow market. It's like trying to, you know, take a cargo ship through a coral reef. You're bottoming out, you can't really steer, it's not gonna work, it's messing everything up. Eventually, when your ship, so to speak, your position sizing gets really, really big, you need to also put that money to work in a deeper market, like futures. Futures can handle a lot of size. This is a very, very deep market. Okay, so it's really a good place to grow. So I think the best way to go about this long term, generate money, generate income. You can make a ton of money, but it's not infinite, right? In small cap momentum world, pre-market, and then you can trade the futures as kind of another revenue generating source, but also a way to scale things long term, intraday. Now you have kind of a long trading day, but it can be as long as short or as short as you'd like it to be. But if you love trading, I think that's a great stack to kind of put together as far as how to structure your day and what to trade. Very long-winded answer, but there you go. All right, we have 35 seconds till the close here of this 2-minute bar. Again, This is a breakout attempt here. Breakout attempts as of late have been failing more often than not. So let's see how this works out. I imagine the bulls are going to try to take it back into the range here, huh? Yes, Joe. People ask about volume in futures, and I typically make the comparison like you're not really staring at the depth gauge when you're in the middle of the Pacific futures. However, the depth gauge is probably your most important tool when you're over a reef. Small cap momentum stocks. Volume is extremely important. It's one of my main focuses. Actually, my eyes are on the level 2 80% of the time, and the chart maybe 20% of the time. And the level 2, you can kind of read the volume. Sort of. You can read the speed of executions through the level 2 and the tape. And that's extremely important on small caps, right? But when you're in a deep market like futures, if you're during the New York session, if you want to pay attention to volume just to get an idea of kind of confidence on whatever move, that's totally fine. I'm not going to yell at you for doing that. But for me, I think New York session, there's always going to be plenty of volume. So I don't like to let it take too much mental capital away when trading futures specifically. Bull's trying to take this right back into the channel. I'll tell you what, I'm going to see if this ends up back in the channel. I will be back in 2 minutes. I will use this opportunity to get a little coffee. Be right back. All right, we are back, and we are still in this little channel here. So, again, these sideways channels have been very, very common as of late, especially after little bull pushes, which is exactly what we saw. So now it becomes a matter of, can we break this downside and kind of get out of here? Open up some more opportunity, or do we get stuck for a little while longer? This is kind of another really common thing. Oftentimes you end up, maybe we backtest the top, but oftentimes you end up seeing these channels as volatility slows down a little bit. You end up seeing them kind of get cut in half. It forms another kind of line right down the middle that turns into either a support or kind of a resistance before it eventually breaks. These are little nuanced things, man. I think it's very helpful to put in screen time every day. A lot of people have the dream of show up, 5 minutes, take a trade, and leave. I think it can be done, maybe. Maybe if we're being more realistic, maybe like an hour. But you're missing the screen time, so you miss the little nuanced things that happen as the market matures every day, right? Because things are always changing, and the market likes little patterns. Again, resistant to change. Markets have inertia. It tends to repeat things until something big changes. %, gains. You notice patterns. Hey, Nico, I have a question on what should be done after receiving consistent payouts. Good work. Do you believe in allocating majority of gains into passive income opportunities? My thought process has always been this. You take the money you make from trading, and, for me, I've talked about this a lot. I like when the market's dumping. Not, I obviously I want it to go up long term for the sake of America, but when the market's dumping, it's really good for active traders because it increases volatility a lot. You guys see that the VIX tends to skyrocket in market crashes, so to speak, right? That's a very good thing for us because more volatility equals more earning opportunity. And when you make more money in a market like that, guess what you can do now? You can take a percentage of it and drive it back into the market long term, even if it's just midterm for more like a longer term swing trade, but more like long term at cheaper prices because the market's dumping. So you're able to make maybe more money in those markets, at least on average. And then you drive it back in at cheaper prices. So yes, I think that's a very smart way to go about it. But for most people in the early days of being full-time trading, a lot of the money is going to go toward expenses, like life expenses, and that's okay. There's nothing wrong with that. That's part of the process. Everyone likes to be jump to the investing portion. And of course, it's important to try to invest as much as you can early. But that puts this weird pressure on society that they need to be investing, but they're like, bro, I can barely afford my rent, my car, and food, at least high quality food to stay reasonably healthy or achieve a goal. I can barely afford that. Now you're telling me to invest, 45% into the S&P? Come on. That's why I think my mentality around here, the whole go big, just fucking take it huge, that's very real because not only any problem you have, I don't care how big, you can just outgrow it by going bigger. Even if you have 8 different periods of your life with big problems and every time they get bigger, just outgrow it and go bigger than you did the last time and it's fixed. But more importantly, everyone says that because, yeah, it's important to try to invest young. What's the answer here? The answer is to make more money. That's the only answer. The answer is not to scrimp and save. The answer is not skip Starbucks. I mean, come on, bro. You're saving $6, $7, but it gives you, even if you just like it, okay? But if we're not even considering the caffeine, even if you just like going to Starbucks and you spend $6.50 every morning, it's like, if you're not producing an extra $6.50 from that little experience, you know, you probably are, at least if you're someone in more of an entrepreneurial space or a trading world, something like that. Like, that's not the answer. The answer is not to scrimp and save. That's complete horseshit. We all know it. That's not going to make you rich at all. Not even fucking close. Buy the Starbucks, go out to lunch, do whatever you want, but make more money. Way more money. 5x it, 10x it, 25x it, 100x it, and this all comes from just thinking as big as fucking humanly possible. And that gets bigger later. Over time, I should say, because it's really, really hard to think that big when you're 18. I struggle with it too. I remember when I was a little kid, obviously inflation is a role. When I was a little kid, I remember thinking, man, if I'm like 30 or 40, and if I can make $100,000 a year, oh my God. I remember thinking that as a little kid, and it's like, well, $100,000 a year today is like paycheck to paycheck. Now, obviously inflation, maybe you're looking at a couple $100,000 a year, whatever. But even that, man, you're not doing whatever you want, whenever you want, right? You still have problems, believe it or not, at 200,000, 300,000, because everything just grows with the income, right? The answer is to make as much as humanly possible, and there's opportunities like this that exist, especially if you're in America, man. This kind of shit exists, and you can make that happen. But the biggest problem is the societal chains, I think, that everyone has put on your mind. Because I had to outgrow that too. Again, I remember thinking 100,000 a year, that's barely even possible. And now as an adult, to think how ridiculous that sounds. What the hell was the question? Yes, driving it back into passive income opportunities is obviously a great thing, but again, nothing is passive. Nothing's passive. You still have to manage a portfolio. You still have to manage rental properties. Rental properties are actually a huge fucking pain in the ass. The portfolio is a little less of a pain in the ass, but you still have to manage it. Especially if you're maybe, using net sell option strategies to kind of pad the returns. You manage it. Might only take 15 minutes a day, but there's management involved. All right, we're right in the middle of the channel. This is the algo and degenerate zone. So we're 3 trades in on the day so far. Again, quick little update. This is where we sit so far on the day. 3 scalps so far. We're 3 for 3. Let's see if we can keep it rocking. I think it's about time to clean up this chart, huh? Let's clean this up a little bit. We know these levels are here. Well, let's clean this up so we don't... And by the way, you guys see, I'm always cleaning things up as we go. Kind of as soon as I can delete something, I do. I just like to have clean charts, but at the same time, having lines drawn does change how you look at things a little bit. And I like to come into every single trade with a clear head and a fresh set of eyes. So, no matter how you draw something, it always kind of starts looking that way, right? So, I mean, right now, there's obviously this kind of case. Maybe a new little descending channel. However, if you zoom out a little, like you start including this back here, then you look right, you could make the same argument for, hey, you know what, maybe it's just a bigger sideways trading range. So fresh set of eyes, very important. Yeah, man, YouTube's got a few issues today, I think. Everything's good on my end, but I've noticed, a lot of other people also, I reported they were having issues. I think YouTube servers are a little slow today or something. All right, well, ATR right now, which again, volatility. The average range of a 2-minute bar currently is about 12.5. Maybe 2 hours ago, maybe an hour and a half ago, that was like 22.5, so it's down about 10 points. Volatility's sucking up a little bit. But this market is very, very range bound right now, which is okay if it can get wide enough. Right now, this channel is, I'd say, about less than 20 points. Maybe 20 points, which is a little tight. Are you guys trading this little range here? I'm curious if anyone's hitting this. Nothing here for me right now. I mean, it's a little tight. But that's the beauty of the 2-minute chart is we're never far away from a setup. You're really always within 2 minutes. Manuel, how are you basing the number of micros you trade? The other day was 51, today it's 67. It's always going to be changing. Yep, it's always going to be changing. A few of the accounts required a little bit of scaling. So scale up at them. And it might go back down, it might go higher. But also volatility is down. Okay, so I need a little bit more size. And I can, I guess, quote unquote, afford a little more size in the accounts, right? I'm not married to any one size. If we saw a super, super volatile day, maybe I'm trading 20 or 30, I guess. But yeah, yesterday's 51, today's 67. It'll be changing depending on the market environment, volatility, the account status. decently sized bull bar here. Again, this kind of channel here. This is not an exact science, but I just wanted to show you guys that I think things have really tightened down here. So inevitably these always break, of course, but I'm going to get rid of that, but we know it's there. Okay, so that's kind of what I'm thinking about. 23 seconds out from the rollover of this 2-minute bar. Inside close there, on to the next bar here, 1:56 out. You know, we're dealing with this little channel here, so I figured now's as good a time as any to ask you guys. It's been maybe a month since I've checked in with everybody. What are we trading? Are you guys on evals, funded? I know a lot of you guys were trading evals, then you got funded, then maybe, you know, you blew your first round back to evals. A lot of you guys got to be trading funded by now, right? Yes, I'm on the 2-minute chart. When looking at ranges this close, do you include wicks? Yeah, I kind of average through the wicks. It's not an exact science. It's more just an average of eyeballing it. What do I think that most algorithms and humans would draw it on a massive, like 100,000 people sample size? And that's what I draw. Scott, live 2 funded, 1 eval. Manuel, take profit trader, a couple of fundeds and 5 evals. On a funded take profit trader, 150K. You know, the 150K take profits are nice. Daily payouts, those are a big deal. And let me guess, that payout was probably in your bank account in about 5 seconds. It's very nice. It's very quick. Caden, still working on the Take Profit Trader giveaway account. Yes, Caden was, I think Caden was our first Take Profit Trader account winner. It's good. Good to see you still have it. You're still working on it. Get that thing pro, man. Take some payouts. That'd be a nice little ROI on a free account, huh? All right, bears are trying to test kind of the bottom region of this. I'd call this more like a flat bottom. I'd draw probably where my cursor's at. Again, just the average of all the wick lows is where I'd put that. But again, it's a range. This is not an exact science. That's maybe a 5-7 point range. Just an area of interest out of the bulls where the bears start, you know, taking profits on their little shorts. But inevitably these break, so let's see. But most of the breakouts, again, in a range market, 80% plus of breakouts are going to fail, so you got to be careful trading breakouts in a market like this. All right, here's the breakout attempt. Let's see if the bears can put something together. It'd be nice if they could. It'd be very nice if they could. But we got to remember a range market, right? Most of these breakout attempts are going to fail, but if they can, that adds some volatility and gives us some opportunities. Let's see here. I'm very indifferent. We'll just trade what's in front of us. 16 seconds till the rollover of this 2-minute bar. Let's see what we get. I'm looking at this like a range, right? Flat bottom here, attempted break, if that can hold. Now I'm looking at maybe a little descending trading range. Got to be careful on these breakout attempts. If you blindly sell that rollover, in a range market that can be tough, but if the bears can take this lower on this bar, all of a sudden I become interested. However, you know the bulls are going to try this. See, that's why I didn't sell that. Range market. Context is everything. You know, by the way, if you guys haven't taken advantage of that yet, the Take Profit Trader deal from the 4th, they're still running it. Those generous motherfuckers. 40% off, no activation fee at Take Profit Trader, which is really a crazy deal. I mean, the activation fee is $130, and they just wipe it if you use code BIG. Daily payouts, great thing. And then, of course, code BIG is also best deal always at Apex. And Apex right now is that 80% off, and you can pass in 1 day. I always try to pass my Apex evals in 1 day just because opportunity cost. If you're taking payouts, opportunity cost can be a big deal. Mr. V used code BIG this morning. Good work. Yeah, it's really nice. I really like Take Profit Trader. Again, Apex is good for scaling as big as you can because the 20 accounts is obviously nice. But, you know, I've never had a problem with taking payouts from Apex. I've never been denied a payout. Someday I'm sure I will be for whatever reason, but I have never been denied a payout from Apex, and I've taken plenty, which is cool. And I don't think you should be scared of people that, you know, give some of these prop firms a hard time. Some of them deservingly so. Apex, I don't believe, is one of them. They've always paid me. Money's always hit my account. But it takes some time, right? And when you're trying to bootstrap going full time, you don't have time for the money to hit your account where, you know, Take Profit, the daily payouts can be a very nice thing if you're trying to bootstrap going full time because that money hits your account very, very fast. All right, let's see if the bears here can end up taking this thing lower. We got the bull retest of this kind of flat bottom here, right? And at this very moment, the market is trying to make a decision. Do we re-enter the sideways trading range or take this thing lower into a descending bear channel? All right, let's see here. We've got 35 seconds left here on this 2-minute bar. Let's see how the bears close this baby. Kind of looking at this. Right, along with this little flat bottom, we got the retest rejection. 15 seconds out. Let's see how this closes. If it turns into a doji. That's going to close as a doji rollover. All right, on to the next bar, 2 minutes out. If this bar, by the way, had closed like down here in a strong bear close, being that we're in a range market, I would have bought that rollover, betting against a big fall off. But bulls wicked it right back up, closed it as a doji. So on to the next bar here, minute 40 out. If you are just joining us, again, I know there's a lot of new people here. I am trading a 2-minute chart. And up top here, you have the daily, of course, on the bottom. The 2-minute is top right. That's the one I'm executing off of. And 5-minute top left. What is your strategy for 2 minutes in general? Well, on futures in general, regardless if I'm trading the 2-minute, the 5-minute, if I'm trading the daily, it's all the same. If you remove the price and the time, as long as there's enough liquidity on the chart you're looking at, like a 15-second chart might be kind of obvious because it's so wicky, but they're all going to look relatively similar because the strategy in general is price action. That's it. Now, obviously, that's a little bit of there's some nuance there. There's setups, and then there's setups applied to market context. Right now, we're in a range market, so I'm applying things to the range market mentality to the best of my ability. See that inside close? Bears just can't, they're not cocky enough yet to take us lower. If they did, I'd want to bet against them and buy a nice clean bear close. Yeah, for a living, this is a big problem with most people, man. I can pass 90% of my evals with aggressive scalping, struggling to find consistent profit and meet targets on funded accounts, though. Advice? Well, there's a few things that could be going on. This could be a psychological issue. You could... I'd say you couldn't have edge, but if you're being straight up about the 90% of your evals, it could be because it's a smaller sample size of trades on the evals, and then when you're forced to increase the sample size, the number of trades on the fundeds, it turns out that you don't actually have an edge, so the sample size plays out. But with 90% pass rate on evals, you're probably doing something right. Okay, so I would lean toward this is a psychological issue. You get nervous, you start making different decisions on the funded, but also, if you can, size down a little bit. Size down on the fundeds. It'll lower the emotional weight of what's going on, and you'll be able to just focus on making good decisions rather than the dollars. When you're able to focus on just making good decisions rather than the money, in almost every case, the results improve. Dollar bill, same deal, brother. Same deal, man. Size down, focus on making good decisions. You can always scale horizontally, or if you want, I guess you can scale in the same account, but you guys know how I feel about that. I prefer to scale horizontally. I think it's the best way to go about trading prop by far. All right, Bull's trying to break this out. This tiny little channel that started maybe 8-10 minutes ago. However, you know, in the bigger picture in the 2 minute, if we scroll back a little bit, this whole deal is a sideways trading range, just of varying sizes. So that gets kind of tough because you have to look at a lot of things, and then you also have to consider, like, well, hey now, you know, maybe enough people are looking at that and enough algorithms that it becomes a thing, right? Think in terms of self-fulfilling prophecies. I'm going to leave that and see if that does become a thing. And if it does, I'd be happy to trade maybe a little reversion, a strong bear bar closing near the low here. I'd get short, maybe for a back test. But if we break out and take out this wick high, then this ends up not being the case. And then we have a different mentality altogether. So again, if you're just joining us here, I am 3 scalps in on the day. We are 3 for 3. We're up $3,700, $3,795. Yeah, see that bear's trying to take it kind of back into the channel. We are 1 minute and 11 seconds out from the rollover here of this 2 minute bar. Let's see how this closes up. All right, 22 seconds out. Copy trader engaged. Let's see how we close here. Want to see it close beneath my cursor, but not too far beneath my cursor. I still need room. Come on, Bears, hold it. Come on, Bears. Inside close, you guys see that? Bears don't have quite enough backbone. 3 or 4 ticks on an inside bar. Gotta hold off. Next bar, 1 minute 50 out. All right, 60 seconds out here from the close of this 2 minute bar. Right now, kind of an inside bar, but a lot can change in 52 seconds. Let's see what we get. right, 15 seconds. I'll engage the copier in case we got to put something on here. A lot can change in the last few seconds of a bar. But it looks like it's going to be an inside rollover. Inside rollover, hands off, no trade for me. Well, all right, guys. I guess now is as good a time as any. I'm going to go hit lunch. I am 3 for 3 on the day. We've taken 3 scalps so far, and we'll see what the afternoon brings, man. I appreciate you all hanging out. We have a lot of new people here. If you have not done so already, go ahead and subscribe to the channel if you would like. I'd be happy to have you. I am live scalping every single morning. All right, guys. Have a good one. Be patient. Wait for the setup to come to you. Don't trade the middle algo degenerate sections of channels unless there's a great setup, of course. And when the plan presents itself, there's nothing to be scared of. When the plan's there, there is nothing to be scared of. Execute it without fear and be patient when it's not there. All right, but hey, if the plan presents itself 4 times in 11 minutes, you gotta put them on. And if there's no trades in 2.5 hours, you gotta go hands off. That's the job. That's the job, man. All right, guys, hey, make sure you use code BIG, best deal always, everybody wins, at Take Profit Trader and Apex, and I'll tell you guys what, I'll see you tomorrow morning. All right, guys, have a good one.